Hey YouTube, this is Zach with Achilles Financial, and today we're going to be covering STEM Inc. They trade on the New York Stock Exchange under the ticker symbol STEM, and they are the first smart storage AI play that you're going to see on the stock market, and they're a personal favorite of mine. Today we're going to be talking about a summary of the overall company, how they act. I'm going to be looking at their chart and showcasing where they've been, why they were there, and my expectations about the stock going forward. I also want to review their investor presentation that they presented on September 9th. There was a lot of good info in there that I want to cover again this week. And then I'm going to talk about some of the potential surprises for the stock that I see could help them be a catalyst to the upside or to the downside. So that's the goals for today, and let's go ahead and get started. The first thing that I'll highlight is from a summary perspective. What is the company? What do they do? I'll open up the company profile here so you have the capability to look at it. But essentially, this is a company who on the front end, they do hardware sales. They sell the batteries that they are implementing at commercial properties primarily. At this point in time, John Carrington, the CEO, has said they do not anticipate getting into the residential market, although that may be able to change in the future. But we are talking about huge batteries that are utilized in warehouses and other pieces of commercial real estate. What they do is they are used to hold energy, whether for off time or off peak hours, when maybe you are not expecting or energy prices are higher because the drain across the local municipality or the state are higher, or maybe you're utilizing it to store energy for off usage hours because you're utilizing something like solar energy. So that is the main part of their business, and it is anticipated to continue to be the key driver of growth right now. But the other piece is their Athena software platform, which they use to generate better efficiency rates as well as dedicated goals and usage outputs by utilizing an AI-based platform, which essentially means it's using algorithms to determine what is the most efficient utilization of energy for the project. So they have a number of case studies utilizing that. We'll talk about it a little bit more today, but that in essence is the company summary. So they have a very strong leadership team with a lot of experience, and I am very bullish on the overall company. Right now, they currently have shares outstanding of about $131 million and with a market cap of about $3.3 billion. And I said shares outstanding, 131 million approximately. And they are currently not profitable, and they have continued to do well over the past week despite a larger market sell-off. So the stock is overall doing pretty well. One of the key things that I want to highlight on this page is you can see that the percentage held by institutional investors is almost at 44%. So just less than half of all of the investors who own the stock are held by institutions and institutional investors, which does show a long-term play. And in my opinion, I think the stock is still relatively unknown in the broader marketplace. So there's a lot to like about the stock. You can see here on the 52-week range that we've been as low as $9.60. That is still when it was in SPAC form, STPK. You may remember that if you are an early subscriber. But they have also been as high as $51.49. So they climbed and climbed and climbed, and they got really, really high. And then we saw the huge SPAC sell-off this past March. So we'll be looking at that right here. You can see they did really, really well through February, and then they began selling off and sold off even harder into March. So overall, it's been a very good year. They finished and closed the acquisition over the summer. And you can see since that point in time, the stock overall has performed pretty well, even after they announced Q1 earnings, or rather Q2 earnings, where we did have a little bit of a negative surprise due to the valuation of warrants. As of September 20th, which was this past Friday, they did say that they are no longer, or there will no longer be any outstanding warrants. They purchased all of those back. So they have cleaned up the balance sheet to reduce some of that volatility going forward. So despite the fact that we see such a huge run up here, I do want to highlight my expectation is that we will not see a run back to the $50 mark based purely off speculation. And that's what occurred right here. There was no fundamental analysis. There was really no news with it. It was SPACs were hot. They were rocking and rolling. And this is one that involved clean energy and AI. two clean or clear-cut buzzwords, and I think that's what saw here. I also got caught up in it. We made some money, and then we preemptively or subsequently lost some money here as well. So the expectation here is, what are we basing out here? Well, the stocks continued to hold that $21 mark. We did have the pain back in May of this calendar year where it did get as low as nearly $16, bought up, went up into the $35 range, and you can see we've kind of been holding in the $25 range. Right now, they're not expected, per what I'm seeing here on the TD Ameritrade platform, they're not expected to release earnings until December 29th. And this is just an estimate. I wouldn't necessarily hold a lot to this estimate. And the idea behind that is because last time they announced earnings, it was on August 11th with a quarter end close of June 30th. So my expectation here is we'll probably see it at the beginning of November versus the end of December. So that's my expectation right now. That is going to be the key catalyst, in my opinion, to really see some growth here. And the reason for that is because their revenue is based on a cyclical nature, and Q1 and Q2 are traditionally some of the lower earning time periods for them. The CEO, John Carrington, as well as the CFO, have both been on a number of podcasts, been on a number of interviews where they've talked about the company, and they've mostly hinted that the company is doing very, very well for Q3 as well. And that'll be the first quarter that we should see a huge increase in overall sales. The expectation is that the Q3 numbers will beat both the Q1 and Q and Q2 numbers combined. And I think that is the point where we'll see that run, not just from 25 to 30, but all the way up to as much as $40 a share. And the reason for that is because if we look at the fundamentals associated with the company, you can see that they're currently trading at a price to sales ratio of nearly 100. Now, if we look at the overall income statement, you can see that that total revenue is not including Q3 and Q4 of the actual company. This is being based off of the revenue of STPK, which was the SPAC that took it public. So really what we're looking at is a little bit closer to around 60 times price to sales at the current valuation. I think if we see sales come in around the $40 million to as much as $50 or $50 million mark, then you're going to see that that ratio will collapse in half, or the stock price is going to leap up afterwards. So why do I believe that the stock has the capability to really move, and why do I like the company? To look at that and to explain that, we're going to go to their investor presentation right now. So you can find this presentation. It's actually on the investor relations website, so I'm not going to go through the whole thing, but rather I want to focus on a few things. Again, they are a smart energy play. They use the AI buzzword, their Athena software. What that does, and what we'll focus on here, is it provides significant value in a number of different ways. You can see that what I'm going to primarily focus on is highlighting the backup power and the time of use bill management are the things that I'm going to focus on, just because I'm not as familiar with some of these other services. But the key things that I will highlight is they brought on huge customers to be able to utilize in this space. So you can see Home Depot, Walmart, Facebook. One of the things that they highlight as well would be Amazon. So it helps for the company to be able to utilize pricing to their advantage. You can see discharging when prices are high. If you live in a state like California where there is significant strain on the grid during certain times of day, this can be incredibly beneficial when you're utilizing solar energy. So there's a lot of value to this. The next slide that I'm showing right here of when it talks about the deployment and the megawatts under management, this is super important because this is the first time that STEM has actually been the leader on this slide. Last time we saw this, it was back in May, and Tesla was actually ahead of STEM, and STEM has now overtaken them. So this is huge to notice, especially because both Tesla, Mitsubishi, as well as LG and a number of other companies not on here are key suppliers for STEM. So it's important to be able to note that and highlight what they're doing and how they're doing it. So you can see that there's a lot of benefit. We highlight a huge total addressable market, or TAM. There is significant growth here. What I'm looking for, though, to make this company really climb to go up and be able to absolutely kill it in the future is on the financials. You can see right here when we talk about the total revenue, we're still expecting this to be about 147 million in total revenue, with total losses of EBITDA 25 million loss. So if we're expecting 147 million, you can see so far this calendar year we've brought in right at 34 million, with the bulk in Q2, or rather Q3 and Q4. With the explosive growth expected here, again, Q3 expected to more than double, or basically be the equivalent of Q1 and Q2, you can see how there's a lot of potential for the overall valuation to increase as well. This is all just the 2021 numbers, but I'm a lot more bullish long term. And the reason for that is because they expect revenue to continue to grow at a compound annual growth rate, CAGR, of approximately 50%. So the growth there is going to be continuous, but the thing that's going to really drive a lot of that profitability and value for shareholders is the gross margin of 40%. The way that they anticipate doing this is going to be primarily driven by that software revenue. So this gray mark that you can see here, they're expecting 30% of that total revenue to be coming in from software, and that is going to be very, very high in terms of the gross margins because the cost to run that is going to be relatively low. So what we're going to be looking at going forward is how can they actually grow this in a manner that's going to cause it to explode. Some of the key catalysts that I think are going to cause the stock price to drive higher are going to be things like an infrastructure bill, which is currently talked about in Congress. I think that the impact there of driving clean energy across the board could be huge for a stock like STEM. The other things that I think are going to be hugely beneficial for them is the possibility of a government contract. They have hired individuals whose primary job is to work with government regulatory agencies, and I think that that is something that the market has not priced in, is that they could get a contract with the government to work with clean energy and battery storage, utilizing some of those government contracts or credits. There's a lot of unknown there, so I don't want to put a lot of emphasis behind the possibility there that something could occur, but I think there's a lot of value there. Both of those items would add significant growth potential to the numbers that you see here. However, if that gets pushed off, if the expectation is that infrastructure bill will not be as friendly to green energy as it's currently written, then that could definitely be a downward catalyst for the stock because it may impact the 147 million revenue this year, although the majority of that is currently on backlog, contracted backlog, so not really concerns there, but that growth potential could definitely still be hurt. So that is one of the concerns I have. The other concern is if we come in under this 20% number right here, then I anticipate that the stock would fall pretty heavily because this is something that the guidance has been reiterated over and over again, that this 147 million number is going to be hit. So let's take a look at that on the stock one last time. So I've pulled up the 3-month chart. You can see that here. Once again, I want to highlight that we've had a good, strong week despite the broader market selling off over the past week. We had a rough day yesterday, but it's largely recovered today. What I'm going to be highlighting is the fact that if we don't hit those numbers, I see us going back to those $21 levels because overall the company will still be doing better, just not as well as they could have been. So my worst case there is that we stagnate or drop down to that $20 to $21 mark. However, the upside potential, I think if the Q3 numbers come in appropriately, we're going to see it up into that $30 to $35 range. And if that government contract gets pushed through this year, then by the end of the year, not government contract, if the infrastructure bill gets pushed through this year, we could see us in the $35 to $40 range, both of which are you're looking at anywhere between 75 to 80% upside from current levels. What I'm looking for, though, is, again, the long-term expectation. I think that this stock is going to be a $200 stock in 2025 because they are growing incredibly rapidly. So there's a lot to like about the company, a lot to like about the stock. That's what I'm looking for going forward. If you have any questions, let me know in the comment section down below. And if you want to talk about it, this is a family favorite for me in my Discord, which is in the description down below. And if you find this content helpful, please leave a like and subscribe. Thanks for watching if you made it this far, and I'll talk to you later. Thanks.